What's going on, guys, and welcome to Sunday night. We're closing out week 23 of our channel, where we invest $50 every Monday through Friday with the hopes of retiring early. All right, so we had a pretty eventful week this week as far as growth in the portfolio, and everything's starting to come back to where it was, so that's pretty exciting. I didn't go back on the diet yet. I definitely have just been like not really caring. I feel good. I was in the gym today. That felt really good. Um, but I haven't been weighing myself. So we're going to get back on track with that in a little bit. Right now I'm enjoying kind of just like living, working out. I'm going to try to start working out more early. So we're going to see how that goes, see if that's even plausible. I got to drop my kid off at daycare in the morning, so we'll see if I can get the workout in before driving him to daycare, but we'll see what happens. So we're going to dive into the YouTube channel tracker. We're going to see kind of how everything's going, and then we're going to look at Seeking Alpha to check out the changes in the portfolio. All right, so this is our channel tracker. We are going to follow this blue line right across. Today it is June 11th of 2023. You'll see for the weight, I haven't been weighing myself. I'm just kind of focusing on trying to build a healthy game plan, and then we'll start weighing myself again. But investment balance, we are at $6,584.42. So this balance is getting pretty hefty, which is awesome. Dividends earned. So we are now at $65.42 of total dividends earned. So far this month, that's almost $10. Whew. Sorry, let me say that without yawning. That's almost $10. That's pretty solid if we're earning $10 a month. Now, granted, we will be earning more than that. We have more dividends to pay. But at the beginning of the month, to have $10 of dividends is great. We are well on our way to making $20, $25, maybe even $30 in dividends every month. And that is really more motivating than anything else. Seeing the dividends grow and pay us out more and more quickly, that's called the dividend snowball effect. So it's cool to see that already kind of rolling out. So definitely fun there. Total growth, we are at $134.09. I think it's more exciting than how much I'm yawning, but that's okay. When you really look at the numbers, we basically picked up $50 of extra growth. That's stellar. I love it. We're starting to see some stuff, and we're going to see where a lot of that growth comes from. And it is from a very unsuspected portion of the portfolio. YouTube income, haven't made any yet. We made $100 off of people signing up for Sofi. If you want to sign up for Sofi, there's a link in the description. That's where we do the automated investing for this channel. Not sponsored by them, but I do have a link. So if you want to sign up, new accounts, if you put $10 in, they give you like $25 of free stock. So that's a pretty good return. Not a wealth manager, credit counselor, or financial advisor, just a guy in a triangle-shaped drum on YouTube blabbing about stuff. That sounded pretty good. Total subscribers, no new subscribers, but I said this before. I've been really bad in the past couple weeks about updating. Look, it's Sunday and I'm doing an update now, so clearly not very well done. But that is, dude, I'm tired. It is what it is. Total views, 202,996. Again, didn't really do anything, didn't really get anything. That's what I deserve. To those of you, thank you for staying subscribed to my mediocre channel. Total watch hours, we are at 3,814.9 total watch hours. Again, I got to put some more content out, and we got to see what's going on with that. I have all these videos I want to make, and then just not much time, but that's okay. We'll get there. So, that's basically what's going on with the channel. But more importantly, what is going on with the stocks? We are going to dive into Seeking Alpha and check that out. All right, so here we are in Seeking Alpha, and we have all of our portfolios sorted by values, okay? So first things first, we have SCHD and Realty Income. These we're putting $10 every Monday through Friday into these holdings. So SCHD is leading the way with $1,127.91. That's 15.72 shares at 71.73 bucks per share. Forward dividend yield is at 3.3%. They have not announced the dividend yet for this month, but statistically, they do pay a dividend in June. So even though we haven't had that show up yet, we don't know what it is. I'm kind of banking on the fact that they will have one in the next couple weeks. They have paid it out July 1st once, with 4th of July and weekends and stuff. I could see how that could happen. But, realistically, we should get a dividend payout from SCHD this month. The next one is Realty Income Corporation. We have $1,116.23, so about $10 less than SCHD. We have 18.33 shares, and that price is right at $60.91. So Realty Income Corporation is way down than where it normally is. However, it was lower. So this is starting to retrace up again. There's a lot of talk of people saying like we're in for a big commercial real estate crash and real estate crash. If that happens, Realty Income Corporation holds a lot of that stuff, but they do have a pretty good track record of paying a dividend. That's 26 years of consistent growth. And I feel like that's a pretty stable position to have. So I'm not really worried about this. I think a lot of the doom and gloom is priced into the price right now. Usually this is trading up at about $70. So yeah, I think a little doom and gloom is already priced in. With that said, the forward dividend yield is currently still above 5%. So as I said earlier, I'm not a wealth manager or anything like that, but if you can buy Realty Income Corporation at above a 5% dividend yield, in my unprofessional opinion, I almost said professional opinion, in my unprofessional opinion, I think that's a great buy. So, this pays monthly. We should be getting like $4 or $5 in dividends paid out this month on the 15th. So that'll be increasing our total dividends this week. JEPQ, so JP Morgan NASDAQ Equity Premium Income ETF. This was a stock that was about, the fund was about 5-6 months old when we started buying it. I threw it on the channel, and we have bought this using options premium that we have made from buying and selling options contracts. That's how we got this position here, not from really anything else, just from buying and selling options contracts. So we're at 17.45 shares. We have $825 in there, and the price is at $47.29. So when we started into this, we were at like $42. So massive growth for what we've been buying this for. I think it still has growth potential, but we did get paid a pretty nice dividend, and it looked pretty good. So that's, it is what it is. JEPI, right? So we have JEPQ and JEPI, JP Morgan Equity Premium Income ETF. This is managed by the same guy who manages JEPQ. This fund is a little bit more well-rounded, but still designed to pay you a monthly income. So we have the value here. Now this we put $5 a day into. So these are the $5 a day stocks. So we have $587.80. That's 10.8 shares at $54.44. Dividend yield is looking good. We did get paid already this month. That was excellent. Pepsi. So Pepsi is a $584.49 in our portfolio. That's 3.21 shares, and the price did dip down. It's kind of sort of coming back up, but it's very volatile right now. So we're at $182.35. They have a great dividend rate, so we're getting paid a dividend at the end of this month, which is awesome. They took the snapshot at the beginning of the month, so we had about 3 shares. So looking forward to getting paid from our Pepsi holding. I hope the price stays down at like 182. It was up at like 194 or something like that, like 2, 3 weeks ago. So I'd rather not have my dividend buy the stock at 194. I'd rather buy it at 182. So that's what I'm hoping for. It can skyrocket after that. That's fine. Procter and Gamble, right behind. We've got $578.34 in Procter and Gamble. That's 3.95 shares. The price has bounced back up a little bit to 146.56. Dividend yield is still looking good though at 2.57%, which is great. They paid us out last month, so not much to say about that. BlackRock. So BlackRock was definitely down in the dumps for a little while, but it has retraced, and that means we got a lot of it for a great value. So we have $575.14. That's 0.84 shares, $684.40 per share now. So, it was at like 620, 630 for a while, so that's a pretty big bounce. Dividend yield is now below 3%, so we're at 2.92%. I've always said that if it's above 3, that's a great buy. If it's below 3, like the 2.5 to 3 is like normal. But we are now below 3%. Still a good way to buy BlackRock, don't get me wrong, but you're not like stealing a dividend, in my opinion. They did take their snapshot a couple days ago, and we're getting paid out in 2 weeks on that. So good to see some BlackRock dividends coming out. And then MPW is really doing a great job at kind of pushing the envelope here. So we have $565.34. That's 61.52 shares. And, that's at $9.19 a share. The dividend yield's like kind of getting back to something that makes sense, at least on paper. Really looking forward to seeing some quarterly announcements from them just to see how this company's doing. But when you look at the math, right, and it's crazy because this is the whole point of this is dollar cost averaging into dividend yielding stocks, right? So by buying it every day, you buy the highs, you buy the lows, you buy everything in between. Like if I look at my best holding here, which is JEPI, right, highest performing holding in the fund or in my portfolio right now. We have $587 of JEPI, which is $22 better than MPW. Okay? $22 is the difference between my best and what a lot of people would say is the most high risk thing in my portfolio. I personally think it's the most high risk thing in the portfolio, so I'm with you. But I mean, considering one is like considered to be the best dividend income paying investment, like JEPI is very, very well respected by a lot of people. It's not anything new. Well, it's 2 years old, but the internet knows what it is. And MPW is a company that's like 16% shorted or something ridiculous like that. The fact that it's not even that different. Like I've been buying MPW for so cheap for so long that as it's retracing back to a normal price, MPW used to be $13, $14 a share, and that was like pretty standard for it. So if we get back to $13, $14 a share, and my average cost per share of MPW is like $9.40 or something like that, like that's killer. That's insane. So really, really, really happy with MPW. The management team at Medical Properties Trust has just been so on point making the right decisions. They're balancing their books really, really well. I just, nothing but good things to say about MPW right now. I wish I felt the same way about AT&T, but AT&T is slowly rising back up, right? We're not past $16 yet, I know. But we do have $506.96. That's 31.78 shares. The dividend is now below 7%, right? When it gets, really it should be below 6%. So we're still like, it's still too cheap, I think. I think AT&T is really cheap right now. But they're just getting brutally beaten. I mean, it's one thing after the other. Something happens, and then they start to rally a little bit, then Amazon's like, we're going to come out with a phone plan and make it part of Amazon Prime. And they're like, and then it tanks again, and they just keep getting like, talk about beating a horse while it's down. Like, it's so bad. I don't condone beating horses up or down, but like this is just terrible. So, AT&T, I think is still a pretty good buy right now. Once we get this back up to like 18%, or sorry, $18 per share, $19 per share, then we can talk about it. I'm not quite sure, but right now it's really cheap. Now getting into the chaos. Okay, so these two stocks right here, these are more experiments than they are anything else. Kind of like what we did with JetQ. We're like, let's just watch it and see what happens. Tesla is hilarity ensued. Okay, so we bought this on margin. We're doing well. We're killing it. It's great. Thank God for that. But we have $349.31. We have 22.07 shares, and the price is now up to $15.83. Look at this dividend yield. Who did this? What? So 60.8% for dividend yield. They took their snapshot the other day, and they're paying 80 cents per share this month, right? This pays every single month. So, they're paying out like a almost 5% dividend yield per month right now. That is absolute insanity. I see a lot of people talking online about like how they're playing this. Some people are taking those dividends and they're rolling them into other stocks. Some people are taking the dividends as cash, whatever. I'm going to roll it back into Tesla just because why not, right? But yeah, I mean, it's just unfathomable to me. Like 5% a month, like that doesn't even compute. Like if you had $100,000 in Tesla right now, you'd have $5,000 a month. Like that's so absurd. I'm happy that I put some of this in my Roth IRA too, so we'll see how that goes. I'd love to see how Tesla can compound over like I've got 30 years before I can even use my Roth. So 30 years compounding at 5% a month. Ugh. You could put like $20 in there and retire. That's insane. Anywho, I don't want to. It's too new. It's too strange. But I think Tesla has room to grow. I think that enough people, are going to look at this and be like, "What?" Right now, it's got like $10 million in the market cap or something. It's hardly any money. So I think if this thing goes to become like $1 billion fund, like obviously the price will go up. But the whole thing is very strange. Appley is in the same boat, but without the I shouldn't say without the ridiculous yields. They yielded like 2% this month. That's how insane both these funds are. Appley and Tesla are the same thing. I'm like poo-pooing Appley because Appley only paid 2% this month as their dividend. Like, that's still insane. Like, it's completely unfathomable to me. And Appley, this is their first dividend ever, so we'll see how that goes. But yeah, these dividends are getting paid out. So we're already up $10. We got a couple other things paying out dividends, which is always exciting. And then we got Tesla looking to pay us 80 cents per 22 shares. So that's another whatever that is, $16. Or 17.60 or whatever it is. So like that's another $17. Appley's gonna pay us 20 cents per share or whatever it was. I forget what it was. But yeah, crazy dividends coming up. Really exciting time to see MPW back in the ranks with the other stocks. It's not just some crazy random thing that's down by like $200. We're down like $15. So really, really exciting stuff. And that's pretty much what's going on in Seeking Alpha. All right, guys. So that's basically what's going on. In life outside of investing, things are just busy. As always. But been going to the gym here and there, like twice a week. Not good enough. I'm gonna try to start going in the morning before work. I mentioned that at the beginning of the video. I'm deciding now what type of build I want to have, right? I had mentioned this before, and this is like a kind of an interesting topic. Do I want to get big and cut? Do I want to be slim? Do I want to be skinny? Do I want to have dad bod? Like, what am I trying to accomplish? And I still don't really know yet. So I'm trying to incorporate like a lot of cardio with my boxing, and then, you know, alternating between a lot of reps one day and then heavier weight the next day. Um, just so I'm like kind of covered. I'd love to just get in great shape, but there's so many shapes. Like, what does great shape mean? You know what I mean? Like, that's kind of the conversation now. Is I gotta sort of pick a path, and that is also going to come down to my diet. So I haven't figured out what I'm going to do for the diet yet. Right now, I like have a bunch of sushi rice, some seaweed, and some meats. So like, if I eat sushi rice, seaweed, and meats, that's pretty basic. It is what it is. Get some veggies in there, some good multivitamins, and just kind of balance it out, half and half, I guess. Like old school body for life kind of style. Starting to get back into protein shakes, drinking more protein shakes, doing that kind of thing, cutting the calories down, that's for sure. So I'm sort of like at this point just blindly exercising, working out, eating healthy-ish, but I don't really have a game plan. I don't like not having a game plan because it's hard to measure if I've succeeded or not. So that's something that I really I'm trying to figure out over the next couple of weeks. What's my game plan? Where do I want to go, and then make the decision based on that. Because just overall health is one thing, but I also think that there's a benefit. If I look better, I'll feel better, I'll do better, and I don't know. It's always good to feel good, look good, and act well. So that's kind of what's going on with that side of stuff. I'm just working, just a lot of work, working in the day, then come in and work at night. Automated investing is fantastic. I love the whole every single day, $50. Um, I don't have to think about it at all, which is fantastic. Again, like I love that. I love not having to deal with it. So that's something that's crazy. It's yeah. I mean, life's been okay and doing well. I went strawberry picking today, so picked some strawberries and did all that, and that was fun. But I am so tired, man. Like just tired. But it is what it is. So we're still grinding. We're working. I'll see you tomorrow. So, seeing you tomorrow. I wish everybody happiness, health, and wealth as always. And with that, roll the outro.